First take on the index is down almost 65 points.
Down 12 points on the Nifty. We've snapped a two-day winning streak.
For now, we are seeing a slight recovery from the lows. The Nifty is down 40 points.
The market as well, if you can have the Nifty up, is taking a bit of a dive. I mean, once again, so this is not the first time. We've had many of those, but look at that. It's very clear. Just started in the last 5 or 7 minutes, but it's a sharp one. A 75-point cut on the Nifty. I think we'll have the Nifty Bank as well come up for you, which is going to be down about, what, 1/3%.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Reema Tendulkar and these are the headlines for the day. Stock markets end in the red after a range-bound session. The sensex loses 200 points. Banks, mid-caps take a hit. Market breadth favors declines with 2 stocks gaining for every 3 that are lost. Hindustan Unilever beats estimates in Q3, increases the royalty paid to global parent Unilever to 3.45% of its total turnover. Asian Paints misses estimates in the third quarter and blames extended monsoons. Credit quality concerns on micro loans and uncertainty about the leadership impacts IndusInd Bank. FPO, Adani Enterprises FPO of 20,000 crore rupee impacts the stock. Infosys eyes acquisition. CEO Salil Parekh tells CNBC-TV18 the company is actively scouting for acquisition opportunities as valuations have become more reasonable. Adds the deal pipeline is stronger than it was 12 months ago and expects the good run to continue in Europe. That's an exclusive. And in stocks and news, Vedanta registers marginal gains on winning the bid for Meenakshi Energy. SAIL rises 2% as analysts turn upbeat on its prospects. Meanwhile, bullish commentary and stronger margins for the third quarter pushes Persistent Systems up 7%. And here's a lineup of what we have for you in store today. In Market Opinion, Manish Sonthalia, Motilal Oswal, AMC. And in Big Corporate Voices, Salil Parekh, MD, CEO of Infosys. But before we get to that, here is a quick look at the day's market action. The Lal Street saw minor cuts in a range-bound session. The Sensex loses 200 points. The Nifty declined 50 points. Prashant is here with a wrap.
Well, the market ending about 0.5% lower, just under that, and a bit of a disappointing day. There were many attempts at a pullback, but the market never really did anything with it, and by close was down between 70 and 80 points or so. Banks did a little better, so lost a little bit lesser as compared to the Nifty. I'll get to stocks and what put pressure there. I think the one thing which stood out was broader markets were looking a little weaker. Small cap index was down a full 0.5%. Mid caps did a little better, but market breadth was negative. Let's start with large caps. Nifty. So you had Adani Enterprises and Adani Ports, which came under pressure. There is, of course, that FPO. IndusInd Bank was down. Kotak Bank was down amongst private financials, putting pressure on the Bank Nifty. Asian Paints results for the third quarter disappointed on the operating front. The stock ended almost at the day's lowest point. Tata Motors and HUL were some of the others. HUL had a big day on the upside yesterday. It gave back some today. Gainers on the Nifty stocks include Coal India, ONGC and Tata Steel Resources. Actually, you could include OMCs, etc. as well. A fair bit of old economy resource names did well. In the broader markets, as I said, declines outnumbered advances, losses coming through in Adani Green, which was down. Mazgaon Dock was down on volumes. Rallis India started lower, ended sharply lower. Torrent Power, Gujarat Fluorochem, which has been a huge outperformer, has given back some now. JK Lakshmi, Nureka, etc. were a few which lost. There were gainers as well coming through in names like Persistent. There was Hindustan Zinc, KEI Industries, which came under pressure. IIFL Wealth and Bector Foods, which has been out of rotation, came back into the mix today. The market today has seen a bit of a disappointing day after 2 days of strong run. The US indices are also at an important juncture. They sold off sharply on Wednesday. If they can reverse some of that, later today, I think the impulse is to try and buy the dip. The budget's not very far away, so you've got some news flow ahead of us as well. But it's an interesting juncture we find ourselves in.
Thank you very much for that. In moving on to Market Opinion, Manish Sonthalia, Motilal Oswal, AMC says market will pick up in the second half of the year, adds the tech stocks could outperform.
Second half of the year, you'll be looking to cross that 20,000 on the Nifty. But I would say at the current moment, there's not too much of a downside. There's not too much of an upside. It's going to be, pretty sideways market for the time. Technology has gone through a time correction as well as price correction, but even after the fact that recession commentary has been there for the last 11-12 months, we actually have seen top line numbers come for most of the IT companies that have reported so far, and so top line growth estimates have been met, margin numbers have been met, and valuations have corrected. So in that backdrop, it seems like that technology is bottoming up. Relatively, technology is going to be an outperforming sector. On the back of turnover numbers having got met even in a weak quarter, furloughs, etc. Margin numbers have been met. And the outlook for 25 seems to be better than FY24.
Let's get to the second headline now. HUL reported third quarter numbers that managed to largely beat estimates. Profit growth and revenue growth was above the CNBC-TV18 poll. Margins, though, were slightly below estimates. Volume growth at 5% was also in line with estimates. But there was a googly. HUL has hiked the royalty, which has to be made to its parent company, Unilever. Mangalam is here with more. Mangalam.
But as far as the results for HUL are concerned, the third quarter, they were largely in line with expectations, albeit at a higher end of street's expectations. But the fly in the ointment was the announcement that they've made with regards to rearranging the royalty agreement with parent Unilever itself. So let's talk about what's good about these numbers. Revenues coming in at 15,228 crores, above street expectations of 14,860 odd crores. The volume growth came in at 5%, higher end of the range of 4 to 5 odd percent. And the EBITDA as well, a little over 3,500 crores, beat street expectations of 3,500 crores itself. Gross margins improved quarter on quarter, and the net profit as a result of which came a little over 2,500 crores. The street was working with a number just under 2,500 odd crore rupees. The management commentary as far as demand and operating environment is concerned was rather optimistic as well. They said that, inflation has, we've seen the worst of inflation, and now things are improving, and things in both rural and urban India as far as demand is concerned are improving as well. But the fly in the ointment, and what wasn't good about these results, was the royalty agreement that has been revised with Unilever. They will now pay 3.45% of sales versus 2.65% that they paid earlier. This will be increased in a staggered manner over the next 3 years by 45 basis points in this year, by 25 basis points in 2024, and 10 basis points in 2025. So this 80 basis points increase will take place over the next 3 years. The management said that this has been revised for a period of the next 5 years. So let's see where that goes, because maybe the street wasn't prepared for this and will not like this. The demand situation as well as the numbers, no problems. The royalty, a googly.
What we have seen in the December quarter, that the value growth had moved from 6% to 8%. And this has been driven primarily by volumes, where the decline has come down from -6 to -4. This change we are seeing both in urban and rural market. And rural market, as you know, the decline was far more accentuated. So even the improvement has been bigger in rural as compared to urban. The volume growth and the inflation will be inversely correlated. If the inflation goes down, I believe the volumes will pick up.
The royalty today, as we announced, has been approved by the board. Royalty and overall the arrangement has multiple components. It has a component of royalty, both for the trademark and for technology. It has a component of also central services. Now, these arrangements, as I mentioned, are subject to appropriate regulatory approvals. But today what we have is approval from the board, and that's the number that we shared. Overall, an increase of 80 BPS, and this 80 BPS increase will be staggered over the next 3 years.
Mangalam is still with us. Mangalam, Asian Paints has reported a weak set of numbers in Q3. Net profits were up 6%. However, it's come in below street expectations. Volumes too were flat. Could you walk us through the numbers?
Well, it was a top-down miss coming in from Asian Paints as well. Let's start with the volumes. The company reported flat volumes. The street was bracing itself for at least 5 to 6% sort of volume growth coming by. The company has blamed this on extended monsoons in October, and as a result of which, demand being impacted in the peak festive season itself. As a result of which, the revenues also grew much lower than what the street was anticipating. and that flow through to the EBITDA and the net profit as well, which eventually grew by just about 6.5% as against street expectations of over 11% sort of a net profit growth as well. The margins for Asian Paints were slightly better than expectations because they showed an improvement both year on year as well as quarter on quarter, but on an absolute top-down level, there was some weakness. The only silver lining in the cloud is that towards the end of the quarter in December, the company did post double-digit decorative volume growth. So let's see where that goes in terms of a stock performance, because today the street did not like the reported numbers. Management commentary will be key to watch out for Asian Paints, especially at a time when the street is also looking ahead at large competition coming in the paint space over the next few months and years.
Thank you very much for that. The slide in Asian Paints also took down Berger Paints today. But let's move on to the third headline then. Innocent Bank slid 2% despite a strong performance for the quarter. The stock was weighed by lower credit quality concerns on its micro loans and uncertainty over leadership. Many brokerage firms, on the other hand, continue to remain positive on this stock, giving it a buy rating. Abhishek is standing by with the details.
Well, more hits than miss for IndusInd Bank. Records gallored in Q3 FY23 results. It's the 9th quarter in a row that both YOY and quarter-on-quarter you are seeing operating profits growth. So YOY basis, it's at 4-quarter high in terms of the growth rate, and sequentially, that is quarter-on-quarter, it's one of the best growth rate in last 12 quarters. The net interest margin is at 10-quarter high of 4.27%. Return ratio is one of the best in 3 years or even more. ROA is one of the best in last 13 quarters. ROE at more than 15% is the best in last 12 quarters. The RWA to advances, a ratio which measures the risk in the balance sheet. Now that's been reducing and is one of the lowest in last 15 quarters, coming in at little under 120%. So balance sheet risk is actually reducing. Net interest income growth is one of the best that you are seeing in 11 quarters on a YOY basis, a growth of 18.5% over there. Gross NPA ratio or the asset quality is one of the best in last 8 quarters or 2 years, given the fact that it's come in at 2.06%. and it's the second lowest in last 16 quarters. The weak point in the result is the microfinance portfolio. Over there, the MFI book has seen deterioration in asset quality, gross NPA ratio rising to 3.75% when compared to 2.91% in the previous quarter. So in absolute value, the total gross NPA for the bank increased by 525 crore to 68 crore, or about 51% increase has come in from the MFI portfolio alone. Disbursements for the MFI book stood at 8,928 crore for the quarter. However, the book has increased only by 71 crore, which indicates that massive rundown was seen in the book. P&L, both in terms of NI and PAT, it's a beat on our poll. Brokerages remain bullish on the stock. The target price ranges from as low as 1,386 per share to as high as 1,600 per share. Back to you.
Thank you very much for that, Abhishek. Moving on to the other stock that was down in trade today, Adani Enterprises. The stock shed close to 4% today ahead of its 20,000 crore rupees FPO, as new shares will be offered at a discount. Vivek is standing by with the details.
We've gone ahead and given the details as to the timelines as well as the price band, and that is what is weighing down on the stock. So the opening date of this particular FPO is on Jan 27th. It will run up till 31st of January, and the anchor investment date is on 25th of January. Now, what is interesting is the issue price band. The lower end of the price band is at 3,112, and the upper end is at 3,276, which implies a significant 9% discount to yesterday's closing price. Also, on top of that, the retail participants, that are people who will be investing less than 2 lakhs, are getting a further 64 rupees discount on this particular FPO. Now, what is it that the company is raising funds for? Green hydrogen, airports and greenfield expressway projects. The company will invest over 10,000 crore from this particular FPO proceeds, and over 4,000 crores will be used to repay debt in their various subsidiaries.
Thank you for that. Get into a break, but stay tuned. We'll be back in a jiffy with the other headlines. Welcome back. The fourth headline for the day is Infosys eyeing acquisitions. That's the word that came from CEO Salil Parekh in conversation with CNBC-TV18. He also said the company is actively scouting for opportunities. Valuations have become more reasonable. He added deal pipeline is stronger than it was 12 months ago. Listen in.
We are even more ready than we were in May to look at something in terms of acquisitions. As you've seen, the valuations are much more reasonable now. Both areas, on digital and of course on cost and automation, there are opportunities, but we don't know how it will play out in terms of the timeline, but we are actively looking. The 5-year or the longer term outlook for tech is extremely positive. The world around is moving to digital, and we are literally in the early stages. We don't think more than 20% of that work is actually done if you look at the global enterprises.
Okay, another IT stock which was on our radar today was Persistent. The stock ends up with a gain of close to about 7%, and that's the fifth headline for the day. This is on the back of bullish commentary and stronger margins. So to quickly run you through the key numbers, while the revenue growth came in at 3.5%, it was at the upper end of what the company or the analysts were expecting. But this growth came despite a 2 to 2.5% impact due to furloughs and the holidays due to Thanksgiving and Christmas. So if you add that back, those sort of one-offs, we would be sitting at a revenue growth of about 5.5 to 6%, looking very solid. Second, margins expanded. Margins improved by 80 basis points. The expectation were margins will be flat. In fact, the company also said the aspiration is to improve margins by 200 to 300 basis points over the medium term. A worry in the street was the fact that the top line saw a very sharp decline. Revenues from the top line declined by 12% on a quarter-on-quarter basis, but the company seems to suggest that the top client has bottomed out, it's a planned ramp down, and things will turn around for the top client going ahead. Deal wins continue to remain steady, and attrition has ticked down for Persistent. So all in all, good Q3, bullish commentary, and the stock was up 7%. Vedanta was also gained 2% after winning the bid to acquire Meenakshi Energy for 1,440 crore rupees. Nigel is here with more on that.
Well, that's right. Vedanta has been declared as a successful bidder for Meenakshi Energy. They have received the go-ahead from the insolvency resolution process. However, they're yet to receive the nod from the NCLT. They estimate that in FY24, this transaction will get completed. The total transaction value is close to around 1,400 crores, but that's broken up. Upfront, they will pay only around 300 crores, and the remainder will be in the form of secured, unlisted, non-convertible debentures, which were issued by Meenakshi Energy. Meenakshi Energy, remember, in terms of revenues, they function at very low capacity utilization levels. So the revenue is only around 200 crores for the past year. It's a 1,000 megawatt coal-based plant, but as of now, while it is functioning only around 25 to around 30% also, there'll be some capital that'll be required to get this plant up and running. Vedanta says the rationale is they want to focus on increasing their power exposure, and this will help them in their power segment.
Thank you, Nigel, for that. With that, it's a wrap on this edition of Markets Today. Thank you for watching.